You're listening to New Retirement Radio, brought to you by the team at Prout Financial Design.
Hello, I'm your host, Certified Financial Planner, Dennis Prout.
I'm Heidi Cartwright, Financial Advisor and RICP.
Advisors associated with Prout Financial Design may be either 1. Registered representatives with and securities offered through LPL Financial, member FINRA SIPC, and investment advisor representatives of Integrated Partners, a registered investment advisor, or 2. Solely investment advisor representatives of Integrated Partners, a registered investment advisor and not affiliated with LPL Financial. Investment advice offered through Integrated Partners, a registered investment advisor. Integrated Partners and Prout Financial Design are separate entities from LPL Financial. Dennis Prout and Nathan Prout are solely investment advisor representatives of Integrated Partners and are not affiliated with LPL Financial. The opinions voiced in this show program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriately qualified professional before making a decision.
WTCM News Talk 580. Welcome aboard to New Retirement Radio with Prout Financial Design, Thursdays at 10 o'clock. And here we are live with Mr. Dennis Prout. Good morning, sir.
It's great to be here. Thank you, Ron. On Thursday, December 18th. December 18.
One week
before the 25th of December. One of the first songs I did in my choir, 7th grade in the choir I was in down in Mount Pleasant.
Yeah.
On December 5 and 20, boom, boom, boom.
Everybody.
All right.
Together now. class.
Boom, boom, boom.
So we've got so much going on. This is so radical. So fun to be here. Thank you for joining us. For those that have, for those of you who haven't, you're missing out. That's all I can say, you know. He's so full of himself anyway. Anyway, Heidi Cartwright, good morning. Heidi, RICP and Managing Director of Prout Financial, good morning.
Good morning. It's my pleasure to be here, and I want to wish all of our listeners a Merry Christmas this year. I hope they're enjoying this beautiful holiday season.
It is, indeed. And Nathan Prout, good morning, sir.
Good morning. It's great to be here.
Master Lead Advisor with Ed Slott, as is Heidi and myself, too. So we've got lots of tax info today, but also market info for 2026, given that it is coming up, not that far out. If you do have a question of a financial nature, how could they reach us? Please, Ron.
Short of opening their window and yelling real loud, they could call us. We have a telephone here and a text line, and it's convenient. You can call one number to get to either one. So to call 947-0023 or to text us 947-0023. That is the 231 area code.
Beautiful. And then Beth Shire, our own Director of Marketing. Good morning, Beth.
Good morning. It's great to be here.
Yes. And check out our new website if you want to see something really cool that Beth directed for months to get those videographers going on it. And finally got that done, proutfinancialdesign.com. And you may find that extremely helpful, too. And then the radio shows are on there as in podcast form, too, about 20 minutes long each. Now, next week, we're going to do the Christmas show and finally got those stories together. Going to be recording those, I think, a part of that today.
Correct.
And pretty much got the music together, too. Music will be more contemplative and traditional versus some of past years. And then a couple of stories. I'm actually excited. One of them by O. Henry. It's just a really cool story. Looking forward to reading that. That'll be pre-recorded for next week. And our gift to you.
Gift of the Magi?
Gift of the Magi. That is correct, Ron. Thank you. Gift of the Magi. Just a real fun rendition. Real fun story. And then as well the music to go along with it. So they'll be producing that for us, and that'll be on next Thursday as well as Saturday. Thursday at 10, Saturday at 9 for those who want to listen in. Was there anything else we wanted to talk about today?
I think that was about it.
That's it. That was great.
So Nathan's going to be discussing the macro outlook, the big picture outlook, if you will, less uncertainty, healthy growth. And by the way, the stats this year, just stunning. Ron, you were kind of talking about, you had an economist on, by the way, what's his name?
Dr. Tim Nash.
Tim Nash.
Yes.
Not the Nash from the movie?
No. From Northwood University.
Yes. The esteemed Dr. Nash. The monthly inflation rate apparently came in here really pretty cool at 2.7, was it?
Yeah.
And gold a year ago, well, just about a year ago, 2,700 an ounce. Today, about 4,200 to 4,300.
It's up, I think, year to date, we said in the last segment, up 67% year to date.
A stunner. And then silver as well in the $65 to $66 range. They're both like just watching stars in the sky or something, or meteoric shower.
I don't have silver over here on my little lineup of
just
indexes.
look up the symbol SLV. That'll tell you.
SLV. As in
SLV.
silver.
It'll give you the percentage. It should.
There we go.
The
Silver.
percentage year to date.
We're up, well, is that right? 124%?
No, it's not right.
That can't be right.
Isn't that unreal? It was. It is.
It's up 124%.
Yeah. Just wow. It's an ETF that owns silver that, by the way, you can own. But keep in mind, if you own it, that the old song, What Goes Up Must Come Down. Is that how it goes? What goes up? Yeah, it must come down. So it's not that it must come down. It's that it will at some point. As most recently, the tech trade, Google, NVIDIA, they'd been soaring to the sky. Well, they came back down to some more moderate level, 15 to 20%. That happens during market ups. And for us to not say that it won't fly with compliance, thank you very much, but it won't muster with reality. So the reality is that the market takes breaks. And what we saw here this morning was Micron Technology coming in with a huge upturn in their estimated earnings future, but also in their earnings in reality in the current quarter. So it's driving up prices in companies related to that, into the chip sector. We'll see whether or not it's got any long-term legs to it. But it's just indicative and a reality check of how these things go up and down. Even as they rise, they can correct and sometimes be volatile. So as a part of owning this sort of thing, of course, it's important for you to understand your own risk tolerance and keep that in mind as you're looking at things. So the stock market outlook, 3 investment strategies for 2026 from Capital Group. If you really want to know what to do, here it is. Have markets overcome the risks of policy uncertainty? Can markets outside the U.S. continue to show strength? Or will the global rally fade as it has many times in the past? These questions sit front and center for investors heading into 2026. It's amazing how quickly this year has gone by. It's amazing, as you just looked at this, Ron, some of the price changes that we've seen. I mean, who would have thought that basically silver would go from 30 or so to 65? No one predicted that. Most people would have called them crazy.
Crazy people
said that. That's right.
Get out of here.
Yeah, what are you, some kind of an internet dude or whatever? Certainly risks are ever present. Valuations for many types of stocks are sky high. Government debt is skyrocketing vis-a-vis. Let's just take a look at the U.S. government debt. A year ago, $36 trillion. Today, $38.5. That's not 10%, but it's about
going up.
7%, 8% or so. That said, a more stable economic backdrop, if I can say it, bodes well for equities in 2026, and it appears as though things are becoming more stable. Markets are broadening as compelling opportunities expand beyond the Magnificent Seven, Google, NVIDIA, and the rest. Across geographies, industries, and market capitalization, so it's the big picture. We are moving from a binary market environment in which U.S. tech stocks dominated returns to a more balanced one with a broadening opportunity set. That's what we're hearing from all of our advisors, the people that we listen to and try to understand, if you know what I'm saying. This environment requires balance. Balance. I believe the importance of active stock selection supported by deep research has never been clearer, says Martin Romo, Chair and Chief Investment Officer of Capital Group. He must be somebody important. But it's just helpful to, and I would completely agree, that while that growth has been very concentrated amongst Google and these other companies more related to AI, the reality is it's going to be expanding. It would appear this year. And we would hope that your portfolio would reflect the same. Diversity. Okay. Number one, what should you do? Tap into dynamic growth potential. Tech giants have invested in AI infrastructure at a mind-boggling pace in a race for supremacy. There's been some concern about that, too. Along the way, their share prices and investor enthusiasm have soared. The AI boom has also triggered a growing number of news reports questioning whether it has reached bubble territory. I don't want to say that too loudly. Bubble territory. Such concerns may be overblown. That's underlined in a different color. Okay? So I can, emphasize it. See, Nathan? Overblown.
I only have the black and white copies.
Yeah.
So the question there is it real? It's possible we'll see an AI bubble at some point down the road, but I don't think we're there yet, says one of their advisors, Mr. Buckbinder. There are some clear differences between today's AI leaders and the dot-com pioneers of a generation ago. And this is the graph that I really wanted to really talk about most, Ron. I thought this was most helpful, Why? Why, you say? There are clear differences between today's AI leaders and the dot-com pioneers of a generation ago. And now we're talking about the internet age, 97, 98,
Early
99,
2000s. Yep.
where, the market went down for almost 3 years. It was devastating. Clearly, an overpriced situation. Companies' prices got well ahead of their earnings. For starters, stock prices for AI leaders are generally supported by solid earnings growth. What's more, the companies making aggressive AI-related investments, including the Magnificent Seven, generate strong free cash flow that can support aggressive capital spending for some time to come. We're only in the beginnings, not the big innings, the beginnings. Okay? So when you look at this graph, Ron, you can see how the stock price growth significantly outpaced the earnings growth. Correct?
Correct.
Now, when we turn the page, if you would, turn the page to the back of the next one, look at those earnings growth. Earnings growth supporting stock price growth. They're almost as one, the way that they're traveling. Earnings growth supporting stock price growth. Sometimes a picture's worth 1,000 of Dennis's words, and that could not be more true here as you look at this graph.
So you're saying, Dennis, the two graphs are different.
Thanks. For those listeners who can't see the pictures, the graphs, the growth in price way outpaced the growth in earnings here in 2000. One of 2000 was the most difference. It was literally 300% if those were percentages. Today, it's almost no difference. No difference between the two. Basically indicating that it would appear as though these earnings are supporting the price growth of these AI companies to a much better degree. So we're not nearly as risky as we were then. Already the list of companies adopting AI in pursuit of boosting productivity has expanded from healthcare to media to financials. So there is an increasing use of AI in spite of all of our own fears. I get it. There is a lot of fear about AI, and for many good reasons. However, J.P. Morgan Chase has reported that it saved $2 billion using AI to generate operational efficiencies. So those operational efficiencies, which Scott Bessent was quoted as saying 3 or 4 weeks ago, concerned about, are starting to occur.
Do you see AI in your industry or in your office in the future?
Absolutely. We're already talking as a leadership team about incorporating it. We're going to hire a couple of robots. We were talking about that last night to serve coffee.
Nathan, good luck, Nathan.
We haven't figured out what to name them yet.
But I mean, is there a role for AI? I guess like in analyzing financial trends and prices and stuff like that.
They're already doing that. Yeah, the stats, but also in utilizing notes and helping us with notes with clients. Now, obviously, clients will have to approve that, and that there is a very strict parameter in which we can use them for compliance reasons and others. But yeah, even with those strict regulations that we're seeing, we're going to see a significant increase in the use of AI.
What do you mean, like notes? Just notes that you
for,
take?
that we're taking for clients, yes, to make certain that we're, you'll see the same thing in doctors' offices as they're taking notes, as you're saying, this is what's going on with me, and so on. Here are my issues that I've got. I think we'll see a lot more doctors' offices utilizing the same within their own health requirements in terms of HIPAA and that sort of thing. Compliance and what's the other term? Compliance and
Regulation.
Regulation,
but also privacy. That's the word I wanted.
There you go.
Okay.
Privacy laws and rules. With its potential to transform the economy, the AI boom is also generating growth opportunities for power generation and capital equipment companies that can build out AI infrastructure. So the infrastructure boom may well get ahead of itself. That's been another area of worry. We'll see. 2, diversify portfolios with international investments. They have outperformed the United States for the first time in a long while for this year. New catalysts for growth across Asia and Europe are showing that the strength of the U.S. economy and stock market doesn't mean exclusivity, as other nations are also pursuing productivity gains. They're jumping on the bandwagon in terms of defense spending as well. Taiwan, a great example. What was that, 10, 11, 12 billion, whatever it was? And then the last point, moving beyond international. Defend against volatility with dividends. In essence, it could be dividends. Vanguard would say bonds. Investors concerned about the volatility that can be associated with highly valued technology stocks would do well to remember the important role dividend-paying stocks can play in a diversified portfolio. They have historically been resilient during market declines, but have generated positive returns when markets have advanced. And we've been recommending that in the portfolios for clients for the last few months to increase the dividend-paying sector of their portfolios, not only for diversification, but also for anticipated performance. Wow. What a year it's been. We've been pleased to be a part of it. It's been an honor to be on this program here on a weekly basis, pretty much. And it's fun to look back at the success of our clients and to be a part of that. And always keeping in mind that the markets can move negatively at any given point in time. But proper diversification, intelligent asset allocation can make a huge difference, because we're moving beyond just the S&P 500 in terms of diversification. You're going to want to consider some of these other areas that can really help bolster returns historically, as shown by history, but also alleviate some of the anticipated volatility that we could expect, which Nathan's going to address, and Heidi after her. Heidi first, Nathan second, after the break here.
We have a couple of notes here from actual listeners. Somebody wrote earlier, said, C-Ron stocks are up 200 points. What does that mean? Is that 5%, 25%? So somebody said on the radio, when you mentioned all these figures, if you give a percentage, it does help. So, for instance, today the Dow is up 220. That's 0.46%.
Yeah, it's almost up
a half a percent. It doesn't sound like a lot, but on a daily rate, if it was 0.46% every day,
yeah,
right,
it's a big number.
That's a big number. So
yeah, on a daily basis, yeah, if you get a 0.5% in a month, as an interest rate, that means you're getting 6% in the year.
Yeah,
yeah.
The other one was to you all. As always, thank you all. With the 2019 Secure Act, beneficiaries now have 10 years to liquidate the contents of an inherited IRA. I am now 62, but had written a trust years ago for my child, in which I would give him money over the course of several decades. This now seems to be a conflict with the law and my wishes. What would happen to the inheritance and my existing legal directives if I were to perish before I can update my trust in accordance with the Secure Act? So in a trust, they can't bypass the Secure Act. Inheritance has to be 10 years and out?
That's correct. The inherited IRA has to be 10 years and out, and then it conflicts with trust taxes, because trust taxes are very, very high. And it also conflicts. It means simply within that IRA, it has to be emptied into that trust. The problem with that asset in the trust, if it's creating significant dividends or interest, then, Heidi, what would you say?
Well, I would say that in this circumstance, that prior to 2020, your strategy might have been a good idea, but 2020 was a game changer, especially in the trust world. And like Dennis was indicating, the high tax rates from trust income or any kind of income that a trust generates really changes the game. So if you have a trust that was written prior to 2020, you really want to get that reviewed. In fact, we recommend to our clients that they look at those estate documents, every 3 to 5 years, because as laws change, as your family changes, circumstances, you will want to change. But you do want to take a look. In the meantime, what he could do, he could switch up beneficiaries depending on what sort of result he wants.
A great point.
Happen.
The key point is get with your financial advisor as well as your attorney. Use them both to your advantage in this kind of planning. We're only got part of a question there. Obviously, we don't know the full answer, but just to be sure, you do need to have that reviewed, and that question is very valid today because the rules have changed dramatically, making trust more difficult to justify after the Secure Act.
Yeah, and it's all what kind of assets are funding the trust, because some assets are fine to fund a trust. It
Exactly.
all depends. So.
It depends on what's in the trust. That IRA may not even be directed by the trust. If that trust isn't named, then that trust doesn't have control over it. So the first thing is to look at the beneficiaries of that IRA. So that's just one of many. Yes.
Let's go before the break. We'll take a phone call.
You bet.
Hi, who's this?
This is Denny.
Denny. What can we do for you, Denny?
So there's a family cottage that's going to be inherited, and probably sooner than later, but it's going to 2 family members, and it's in a Ladybird trust. My concern is that they had to sell part of the property in order to facilitate payment for a facility for the parent, which is now sitting in that trust. did that create an issue that needs to be watched?
Did what create an issue? Selling the property?
Sale of part of the property. The property is a cottage, and part of the property was sold off.
Well, that's why they're alive. While the trust is dictated through them most likely as trustees, they can do with that property whatever they wish. If the proceeds were used for their care, which I'm guessing it was.
Yes.
Yeah, then it's not a problem. It's not a problem.
Okay.
Right.
All right. Thank you.
You're
All right,
welcome.
Denny. Thanks for calling. 947-0023 on the phone. Same number on text, 947-0023. Couple notes before Heidi takes off here. Somebody we discussed this, but in December of 2016, silver was trading at $16 a troy ounce. Today, $65. Tough to beat those numbers. And
Yeah, just you wait. This is interesting. And the reason I say that is because institutional ownership is still, almost non-existent in that trade.
well,
And, some would call silver, not a real, it is a real asset, but something much more speculative than gold. Because gold is, more stable, if you will. It is more stable in price than silver.
do you think some people look at gold and say, well, we can't afford, an ounce or a lot of ounces of gold, so we'll just buy a bunch of silver
Yeah.
as an
You bet.
alternative?
It's much more affordable, of course.
Yeah.
What's interesting, affordable, comparatively, the relationship there is narrowing. We could have a whole show on that. Well, Dennis, you want me to stay awake? I know. But anyway, gold and silver have traditionally traded in a range, a mathematical range, if you will, divisor range, however you want to call it, more recently in the 80 to 90 range. Well, now it's back down to about 75, 70. So that range, that price range is narrowing. That's another reason that silver is up, even though gold is up as much as it is. So if it goes down to the range it was back in the 30s and 40s, where it was near 20, that'd be incredible.
What
in
do you mean
terms
the
of price.
range? The
But if the range, what I mean by that is
Gold
you
and
take the
silver.
price of gold, divide it by that number, and you're going to come up with the price of silver.
Okay.
So or vice versa. Now, because Nathan has this handy dandy trusty calculator here, right now
We're not sponsored by HP yet.
the
We're close.
range is 60. The range is 66. So let's just say we had the price of gold at 4,300, and we divided it by 20. That's $215 on silver.
On silver.
So I'm not saying by any means, shape, or form that range or price relationship, if you will, is going to go to 20. But if it did, that would mean that silver would be trading over $200 an ounce.
Hello.
So history doesn't always repeat, but sometimes it rhymes, and it's amazing to watch. There are reasons that these metals are going up as they are, and they are extremely volatile, but it can be a good source of diversification.
All right. One
So,
more note here.
yeah,
It says,
don't trade in all that silver right away, okay?
Just a quick thank you to you guys for financial advice each week. I especially would like to thank you for recent shows featuring Ford Insurance. Alicia Ford lived up to your recommendations and helped me navigate the changes in my health care this year. Merry Christmas to Prout, Ford, and the gang.
Oh, that's nice.
Our pleasure.
The gang.
Appreciate the good word. You bet. Yeah, it's something navigating that. So, Heidi, what do we got in tax? What you need to know about the new tax deduction for seniors. Is that really accurate?
Well, it is. This is an interview that was done by Morningstar by Ed Slott. And Ed Slott was on the show last week, and it was a very lively show. But this goes into a little more detail into that one big, beautiful bill that we all heard about this summer. and I was going to focus on the deduction for seniors. And let's start with the few key takeaways that are in the article, and then if we have time, we'll dive into each one a little bit more. So the new law, the deduction for seniors, makes it so that if you are 65 years or over, you qualify for a $6,000 deduction.
An additional deduction.
Correct. The deduction doesn't change your adjusted gross income, the amount of Social Security that will be taxable, or the amount of investment income that could be subject to the 3.8% investment income tax.
I thought a deduction does change your adjusted gross income. Doesn't it lower it so you pay less tax?
It lowers the amount that you have to pay tax on, but your adjusted gross income is the same.
But this is different. This is a different deduction.
Right.
Okay.
So it's a great deduction because it stacks on top of the already existing standard deductions for seniors. The deduction may collide with somebody who wants to do a Roth conversion and wants to maximize that 24% income tax bracket because it's still a good low bracket at 22%. So they're talking about if you push yourself into a higher tax bracket. At best, the $6,000 deduction will only net you about $1,300 in tax savings, and it's probably less than that if it all was at the 22% bracket. So again, it's going to change depending on what income tax bracket you're in, the impact. There are strict income limits on the new deduction that married couples should keep in mind, and this deduction will be available if you're taking that standard deduction or if you're an itemizer, which was something that I was sort of surprised. I didn't realize that if you itemized, you could still get this extra deduction.
Yeah, which is wild. So you got to be over age 65, and this is an addition to either the standard or for those that itemize, as long as you're over 65 and within the income limits.
Exactly. So Christine Benz, who was the interviewer, her first question was, how does the tax deduction work and how does that come about? So Ed answered and said that there's a lot of misinformation out there and a lot of people were rushing to the front. They wanted to be the first ones to report on it. And they said that it would be a no tax on Social Security. Actually, it has nothing to do with Social Security. Two absolutely separate provisions. That's the biggest piece of misinformation. It's actually a much more simple concept. It's a senior deduction. It's called in the law the deduction for seniors. You get it if you're age 65. That's all you have to do is be 65 to get it.
So he's calling anyone over 65 a senior, Ron. Any opinion on that or thought? I'm just curious.
See, nothing wrong with being a senior. Better than being a junior.
That's great. Okay.
But
Go
again,
ahead,
it has
Heidi.
nothing to do with Social Security, and it's a below-the-line deduction. It doesn't change your adjusted gross income. It doesn't change the amount of Social Security that will be taxable, and it doesn't change the amount of investment income that could be subject to that 3.8%. So let's look at an example. Let's say you have a person that is 68 years old. So he qualifies, but he hasn't started taking Social Security because he wants to wait until age 70 to get the bigger check. So he gets the deduction even though he's not taking Social Security because he's 65 or over. But on the flip side, let's say you have somebody who's 63 but decided to take Social Security early because they needed the money earlier. They're taking Social Security, but they don't get the deduction because they're not 65.
You got to be 65.
Exactly.
That's it.
That
That's
is
simple.
the key.
Okay. Hold on one sec there I want to get somebody on the phone here before we
Sure.
go to the next
You bet.
next point there from Heidi. Lawrence is calling from Traverse City and Lansing. Good morning, Lawrence.
Good morning. I just wanted to comment about the previous two callers. With the trust, if a trust does receive IRA income, it can distribute that right away in the current year, and they will get a distributable net income deduction for that. So then the beneficiary would then have to report the income. But
Correct.
That's a backup if you do have a situation like that. And then secondly, with the I've never heard of a ladybird trust, but I've heard ladybird deeds. You got to look at the deed very carefully to make sure that the grantor under the deed has reserved the right to convey the property during their lifetime. I've seen a couple of ladybird deeds that I don't know where they got the forms, but they were deficient in how the grantor retained that interest, because they can generally in a correct ladybird deed, the grantor would retain the right to convey the property, and then exclude the remainder interest would be excluded and extinguished. So, and in that case, the case that you were talking about with the cottage, that would be correct. That there would not be that property would be conveyed to the third party and not be subject to that deed. So
yeah,
anyway,
part of that was they were needing it for long-term care. So that's, Lawrence, you make a great point, is the importance of getting together with an attorney on this. I'm assuming you're an attorney.
I am, and I have a master's in tax law, so I kind of
very good.
I work with CPAs and financial advisors quite a bit. So.
I appreciate the call, Lawrence. Thank you very much. Now, a further point in regards to that trust and slipping out the income to the beneficiary, if you will. The problem this gentleman pointed up was that it was a trust limiting the amount that they were going to give to the beneficiary. So that's where you wind up with the trust tax issues. And that's what we were talking about. But again, it still points to the importance of getting together with the attorney and saying, okay, here's the problem. Obviously, they're going to, well, hopefully they'll understand this. As you're pointing up, Lawrence, there's a problem with this trust. How do we address it with this child whom apparently I still am uncomfortable with getting a lump sum, okay, and or funds outside the control of the trust? Yeah.
Yeah, because I prepared trusts like that for years, where we would be able to, even a non-spouse beneficiary, you could stretch it out over their life expectancy.
Sure. And that was nice for that. Yeah, that's done.
It was great, yeah.
Appreciate the call, Lawrence, man. Great info.
You.
Yes, thank you.
Thanks.
Yeah, I love it. It's fun. Okay, sorry, Heidi.
Right.
Go ahead.
So the senior deduction we've established, you have to be 65. If you're 63, you don't get it.
You don't get it.
If you're 66, you get it.
But Ed wanted everybody to know that it is a great deduction. And for a married couple who say they're both over 65, the amount of deductions that stack on top of each other, you can get up to $46,700. And how do you get to that? Well, you have your standard deduction, your regular standard deduction for married couple at $31,500.
Okay, hang on just a moment. Now that's key. The previous year in 24, the standard maximum deduction a married couple could get was $31,700. Now, for many, not everyone, for many, it's bounced to, what's that number, Heidi?
$31,500.
$46,700. It's $46,700.
Well, this is all of them stacked on each other.
Right. Yeah.
Right.
That's if both people in the couple, within that couple, are over 65.
So you get your standard deduction, and then if both are over 65, there's a senior deduction for being over 65 or blind. So that is another $1,600 apiece. So that's another $3,200. Then they each get that $6,000 that we're talking about. So that's another $12,000, and that's how we get to our $46,700.
Wait, Heidi, did you just say for being over 65 or blind?
Yes.
Yeah. And by the way, and I believe that difference
That was
too,
confusing, Colleen. I agree.
Colleen is like, so 65
caveats, really.
is like the $1,600 one, and I believe blind only jumps to $2,000. So that 65 and blind aren't that much of a difference in the government's eyes.
It's or. It's or.
Right.
Yeah.
So the
it's not and.
Right.
The $6,000 senior deduction, you said a couple gets they each get that, even if they file married filing jointly. They
Right.
still each get $6,000.
As long as they're both over 65. But if one is 65 and the other one's 64, they only get 6,000.
Right.
I can see it now.
It's amazing.
Darling, when do you turn 65?
Well, what if your income was $46,700 and you got all these deductions? It would come out to zero, right?
You might not be paying very much tax then.
Yeah.
Yeah. It'd be good for you. And remember, this starts this year. even though the bill was passed this year for 2025, the year we're in now. So you should see the results
Could you turn off Colleen's mic? Thank you.
on this year. So
Oh,
that's
sorry.
exciting as
Yeah.
well.
Now, what's interesting is, in this case, 0 is your hero, Ron.
0 is my hero.
Yeah.
Yeah,
Why is that?
because you're not paying any tax.
No,
Oh,
no
yeah.
tax, man.
So there are some income limits on this standard deduction being able to qualify. 75,000, the phase out range starts for individuals, and it goes all the way up to 175,000 in income. So that's for individuals. For married couples, the phase out range starts at 150,000 and goes up to 250,000 for a married couple.
So for a married couple earning with over 250,000 of income, you're out. You get none of this.
None of it.
None of it.
All right, we have a call for the panel here in Traverse City. Ken is on the line. Good morning, Ken.
Good morning.
Good morning, Ken.
Quick question for you. We have a my mother lives with us. She's 90 some odd, and there's a deduction for us. Does that also count for this $6,000?
Yeah, the 6,000 has nothing to do with whether or not you're deducting another dependent, if that's what that is. Okay. So this is an addition to that deduction.
It would be on her.
Yeah, it would be on
Well,
her.
it's because I'm not quite certain what sort of deduction you're getting for that, but this is a different deduction, not related to for whatever deduction you're getting there by having your mother in the house. Yes. All right, Beth, stats. We're going to have to skip some of the shoe because of the questions, which we certainly appreciate. But Beth, what do you got in terms of stats?
Sure, we love all the engagement. That was
You
great.
bet.
So Netflix is positioning to acquire Warner Brothers Discovery's studio streaming assets in a deal valued at $72 billion. This acquisition could be one of the largest deals in entertainment history, merging Hollywood's most storied film and TV studio with the world's largest streaming platform. And that's from Yahoo Finance. And then we have the Bureau of Labor Statistics reported that Q3 of this year reported the median weekly earnings were just over $1,200 a week, which is over 4% increase from last year. And for reference, the CPI recorded an increase of almost 3% for the same period.
So the prices went up, but the earnings went up more.
Also, yeah.
Yeah, that's a nice increase. It really is.
4.9%. Yeah, was
Yeah.
it 4%? Yeah.
It's better than the opposite.
Right.
Yeah.
And the public trust in the government reached new lows, with 17% of Americans saying they trust only 17% of Americans saying that they trust the government in Washington.
They probably all work for the government.
Backlash from the recent, right. Right. And this is a 5% decrease from last year's statistic of 22%. And in 1958, 73% of Americans trusted the federal government to do the right thing.
Isn't that stunning?
Wow.
73% of Americans trusted the federal government to do the right thing.
That's
I wonder if you graphed
quite
that
the
out
drop.
with the growth in the national debt and the drop in the trust of government.
Well, that would be interesting.
The
to
growth
see.
of the government's gone up and the trust has gone down.
Yeah. It's the World War II generation, I think,
right.
had a much higher trust in the federal government.
Yep.
Franklin, FDR, and all the rest.
Right.
Yeah. That's an unfortunate change for sure.
It really is. Yeah, I'm sure there are
Ouch.
a lot of things to take into consideration with those numbers.
You bet.
Lou in the UP says, looking forward to your Christmas show. Dennis and the crew always have the best holiday shows.
Well, thank you.
Sweet Lou in the UP.
Sweet
All right.
Lou.
We love it. Yeah, I am. I'm just looking forward to it. I really am, because music, we're going to change it up this year, and really do put some time into it. So thanks for the good word. Yeah. We'll do our best toward that. It's been something, I don't know, we've done probably 7-8 years now, and it's just it's kind of grown in and of itself, and we just we love shooting that out there, and glad that you enjoy it. Appreciate the good word. You bet.
All right. So next Thursday is Christmas. Merry Christmas to y'all.
Merry Christmas.
Happy
Merry
New Year.
Christmas.
Merry
Happy
Christmas
New
to
Year.
you too, sir.
And Dennis's show will be on Christmas morning. You can listen to that, and then again Saturday, and then you'll be back in January next year.
You betcha.
Yeah. We're not coming back till next year.
You
Yeah.
betcha. All right.
26.
All right. Thanks for being in today, Dennis Prout, Heidi Cartwright, Nathan Prout, Beth Shire, and you can always reach them at Prout Financial Design in Traverse City, Michigan at
231
947 3992.
All righty.
There we go.